What's up, traders? OJ here. New week, new data, and a lot of noise out there. Let's keep this one short and real. I'll walk you through what I'm watching on the calendar this week, what stands out on the charts, and how I'm going to approach the week mentally. No predictions, just perspective. So let's dive in. So let's look at this week's calendar and news coming out. I focus mainly on US pair data, which influences most of the pairs I trade. Gold, S&P 500, and NASDAQ. So this week, we don't really have much data coming out from the US, apart from the one on Wednesday, which is the FOMC meeting minutes. It's like the summarized version of the forward guidance. So this is pretty much important. It's coming out on Wednesday, towards the end of the day, the meeting minutes. So this is a very important data to go through to read the summary of what they said during the last interest rate court meeting. So this is like the meeting minutes. So this is pretty much important. From what I gathered from the last meeting the Fed were they were a bit hawkish. Yeah, that was a rate cut, but the tone was a bit hawkish in the sense that inflation is still sticky, and inflation is coming out next week also. So which is one of the probably the only data they are looking forward to know if the next rate cut this year we still hold or not. So this week on the US data, we only have the FOMC minutes coming out, and that's pretty much it for me. I don't really look at any other fundamentals when it comes to what I'm trading, unless I'm trying to like cross pairs, like trade forex pairs. But what I'm focusing on is the ones influencing what I'm trading directly, like the US data, so which influences gold, NASDAQ, and the S&P 500. So yeah, that's it for the fundamentals and the data coming out this week. Let's dive into other data such as seasonality and calls and see what's happening there. So let's go through court analysis. I use court data. Court data is like my institutional positioning, like where I see look at leverage funds, the hedge funds, and the banks or something where they're positioned in the market. Not exactly where they're positioned, what they've been doing actually. So court comes out on Tuesdays, but the data doesn't go public up until trading at the end of the trading day, at the end of trading week on Fridays. So we go through that data on weekends to see what happened the previous week, where the institutions or they, how much they traded or how many contracts or long or short contracts they added, see the next positions and all that. So I use court as more of a gauge. It's not like a holy grail or anything, but I use more of a gauge to see where these guys are putting in their money. It's just like that's how I simplify the court for me. Many people use it for so many other things, try to get into more deeper stuff. So for me personally, I just use court to see where the big guys are dumping the money, or where they are actually removing the money, or where the money is moving. So yeah. So for court, you can see from this is a H finder also. I use them for my data analysis. So it's a pretty good software. They collect all this informations and summarize them in a place where you can just go and look through the information in a snap. We can see we have a delayed. It says here delayed due to government shutdown. The US government shut down last week due to delay in funding or something. So, but I see that as a noise. It happens once in a while. I think it happened last time it happened was 2018, also during Trump administration also. Yeah. So now this is another one happening now. So we'll give it maybe before next week ends, might reopen or something. So court last week is yet to be published, but we'll look at the previous ones just in case, to go through the previous ones. From gold, you can see gold at the bottom of this place there. Gold, they had over 332,000 long contracts and 66,000 short contracts. They added 6,000 extra and 5,600, almost 6K short and long contracts. So I think they're like, but they have more long contracts on gold throughout the year. We've been very bullish on gold. You can see the next position is over 260,000 long contracts, and open interest is still high. The difference is just a little bit, 0.9%, and the short contracts are just there. I mean, gold has been very bullish. Throughout this year, we have had so many reasons for gold to be bullish, from economic uncertainties to where the wars in the Middle East and so on. So gold is like a hedge against this stuff, inflation, so on and so forth. So gold has been very bullish, and also during red cut season is also good for gold because investors are not that interested when it comes to rate cut season, leaving their money or in currencies that are not providing any yield. Or we say rate cut season means less for yield curves. So all else rate hikes, we'll just start shifting bias or something. So for now, you can see that's still very bullish on gold. You can see that it's pretty much obvious. It's not hard to read. You just look at the net difference. I look at the net change. And you look at the total contract, long and short contract. Look at the change within the week, because this is every week. You will know how price moved through the week. So at the end of the day, you can see that there are still more long contracts than short contracts. Way more. Yeah. So as for NASDAQ, which is where here we still have almost the same thing too. A little bit a slight difference in long and short contract. I think a difference of 20K. So I would say they're like approaching the break even. So we're gonna either have a dump or we have a continuation to the upside on this. From what I'm seeing from the court on NASDAQ, I'm not predicting. I'm just observing what I'm saying. The SPY also same. Well, SPY has over 400,000 short contracts and 229,000 long contracts. And now look at another angle from this. You can see we have a whole lot of short contracts, but look at the changes. The changes is over minus 41,000 short contracts. That means they are dumping their shorts. They're changing their minds. Okay, they are no longer interested in these shorts, and they're adding more longs. You can see that. Remember, this is from last 2 weeks. Last week data has not been published, so we'll have to wait for the government shutdown to reopen for us to. But this is how I go through my week. I just look at this data, just have it at the back of my mind. Yeah. So maybe later we'll have a more deeper dive video on court analysis and my understanding on them and how I use them actually. So for now, this is I just go through them on the surface level, just glance through the numbers to see, okay, this is this and this is that. So yeah, this is for my data snapshots and what I go through during the week. So after this, I go through my charts, which is the last thing I do. I go through my chart at the end of the day. So you can see from my charts, I go through my DXY. DXY is the US dollar index. Like I said, I focus on what influences what I trade directly, which is the US economy. Influences what I trade. I trade the S&P 500, I trade the gold, and I trade the NASDAQ. So the US economy influences these pairs, or say these assets, directly. So I'm going through the DXY to see what has been happening. You can see since I go through starting with the weekly time frame, you can see the US economy has, people are saying, most people believe the US economy is like dumping or something. But when you zoom out, you can see they've actually been up there. So this is more like what's it called? Like, I won't call it a reversal. It's more like a cool off. But when it fundamentally, I would call it a soft landing. See, when we go through cycles of where we've gone through a growth phase, we've gone through expansions. Now we are in a little bit of contraction and we're coming down. So we can either have a crash landing or a soft landing. So I believe the US economy has soft landed. Inflation is high. They're cutting rates. There's still a lot of money in the market. So I don't want to go deeper into my thought process, but I just want to show you how I go through the market every weekend before approaching the market for the new week. So I just look at this, from my fundamentals to my data, then I go to my chart and look at where prices are sitting. So you can see with this weekly analysis, that with this on the weekly charts where the US economy is sitting, it looks like it's in the short range here, there. You can see that it's like in a short range, waiting for something like a reaction, waiting for something to happen for it to either move up or continue down. I don't know what's gonna happen, but what I know is this is what I'm seeing. on the DXY. It's more like in an what's it called, accumulation range, accumulation zone. So in the range, you can, if you still break it down on the daily time frame, you can also see that too on the daily time frame there. Same with the 12-hour, 4-hour. I don't really go beyond 4-hour time frame when it comes to trying to analyze on the weekends like this, because I'm trying to like mark key levels. You can see that we are in the range. It looks messy, but obviously we are in the range. So when I'm done with that, I also go to my gold. You can see gold has been ripping all through. Apart from not seeing the cut analysis from last week, from the one from the previous week, you can see after this range here, gold went up, which is obviously if data comes out this week. If this was not a news, if it wasn't reacted, it wasn't. If this doesn't didn't happen because of the news, or probably because of the U.S. economy shut down, because gold, when there is an uncertainty, gold goes up. When investors doesn't even know what to do, gold goes up. When they actually know what to do, or say when there is, when we say when things are not going exactly how they want it, gold will also go up. So it's more like gold is a hedge against whatever that comes into the market. So they were only interested in other markets when the benefits are higher than actually holding gold. There's no actual benefit from holding gold apart from getting higher prices or something. There's not like a interest return or something. That's like it's not like your yield. What's it called? Like your U.S. Treasury bonds, where get returns on just by holding those assets. Gold is not like that. Gold is more like a hedge against those things, where it's more like when it comes to crypto, it's more like your stable coins, where you buy just to hold, to preserve your money or something. So apart from getting a higher value, or buying higher or buying cheaper, or selling, or selling higher or something, and buying when the price is lower. So after this range, gold popped up. Now, personally, I'm not a fan of all-time highs. When prices are at all-time highs, I kind of like ignore until I get a very good fundamental bias to either short or look for bounce backs to buy back. So for me on gold, I'm not going to short gold because it's sitting at all-time high, but there's still potential for it to go higher. I don't know, but what I'm saying, with if data supports, for instance, if price comes back into this range, I'll buy back to continue. Or if price doesn't support, or say say inflation doesn't come out, say next week inflation doesn't come out well, or I'll look for shorts. But for now, I'm sitting on my hands until things or until news or the fundamentals started showing up. So for ES and NASDAQ, same thing. You can see we got this dip here and continue. What was this? This was April. Price has been pushing all through high up until now. This is weekly, remember. This took a lot of time to happen. So same thing here, all-time highs. Because sitting at all-time high, I'm not gonna just short blindly. No, I will wait for reactions. I will wait for something to happen to say, okay, this looks good. I'm gonna try and see. I'll pair with my predictions. Nasdaq, same thing. All-time highs. All-time highs. Same. So I think this week we are still going to sit on our hands. Like price might just range because of the U.S. economy shut down. So the U.S. government shut down. So I think what's it called? Last week the labor market data was supposed to print, but because of the shutdown, it didn't also print. So you can see a lot of uncertainty on the market. So this week I'm pretty much gonna sit on my hands. I'm pretty much gonna sit on my hands this week. So I think that's what I'm gonna do. Mentally, this is where traders burn out. In weeks like this, too much noise, too many what ifs. The goal this week is clarity. One clean setup is better than 10 random impulses. When the market is unclear, just zoom out. Go back to your notes, review your process. Remember, we are traders, not predictors. Stay sharp and have a very good week ahead. If you found this helpful, drop a comment. Tell me what pairs or setups you're watching this week. Let's see how it plays out together. Catch you midweek for updates. See you next time.